It's a red day on Wall Street with many stocks going down, and it's been a pleasant surprise that Zoom has defied that gravity and it's up at this point 13%. Wow, that's great. This is a stock that I believe has been misunderstood. It's a high cash flow generating company that has continued to grow even after it had just a high growth rate during the pandemic. It has sustained those revenues. It's become a very profitable company with very high free cash flows. I am somewhat amazed that this stock hasn't rallied at this point. If you look at the past year in this stock, it's not a pretty picture. In the year to date, the stock's only up 4%, even including the fact that today it's really in rally mode. It's really provided entry points for investors to come into this stock recently at a really low price. So, is this a stock that is a good investment going forward? Man, when I look at the numbers, it leads me to conclude that, yeah, it looks like a good investment. But the way the market has treated this stock is quite surprising. It's really sold it off and pretty much left it as an undesirable. I wonder what's going to happen in the future. I'm going to analyze the company now that the company announced their earnings. They were positively accepted by the market, and the stock again is in rally mode, even though the stock market's selling off quite a bit today. So let me go through the fundamentals and analyze the company and reach a conclusion of what I'm going to do with my shares in Zoom. I've got an investment of a little over $30,000. And I'll have to decide whether I should buy more shares, hold, or even sell my shares. I'll share that with you toward the end of this video. So overall, the company has a market cap of $20 billion, which is not that much, considering that this company was one of the COVID era darlings. This stock just took off. It was quite incredible. The revenue is $4.9 billion, and their net income, $875 million. Very impressive how profitable the company is. The company's been buying back shares because they have a lot of cash. They can buy back lots of shares and prop up their stock price. The PE currently is 24.47, and the forward PE is even lower at 13.12. Analysts say hold this stock and it's discounted. I wonder why they have a hold. I wonder if that's going to change after the enthusiasm that was shown around the stock today. If we look at the stock over the last year, it's up only 2%. Over the last 5 years, you can see that it was really high during COVID, above $500 a share, and now it's trading at 67. This stock price was really sold off. When we look at their financials, there's a lot of green on the screen, just incredible growth during COVID. But what's impressive is the company has continued to grow. There was never negative years of growth. That is impressive because they really went from being a $622 million company, and now they're north of 4.5 billion. That's incredible. So the run rate is really high, their scale is really high, and their profitability is really high. Their cash flow is excellent. They produce lots of free cash, and that in their earnings was impressive. They grew their cash flow from operations more than 300 million. For a company their size, that's incredible. So very impressive. For the trailing 12 months, their free cash flow is $1.7 billion. Coming back to their market cap, even after the stock's gone up, the market cap's 21. If you divide 1.7 divided by 21, we're going to get to north of 8% yield of free cash on this company. This is a company in a desirable space for me, which is technology, software companies that can develop software and sell it to many customers and have a really good gross margin. So overall, to me, it's always been an attractive proposition, yet the market never recognized it as such after the COVID era. I guess they just thought that Microsoft and other companies were just going to take over, but they haven't. Zoom's continued to grow. Their balance sheet's excellent. Balance sheet has no debt and lots of cash. They've been buying back lots of shares, and they continue to hold $7.5 billion of cash. Back to the market cap. Market cap of 21 billion. They have more than 7 billion of cash on the balance sheet with no debt. So really the market cap is 14 billion. So back to that free cash flow yield of 1.7 billion. If you divide 14 into 1.7 billion, you get a yield of more than 11% of free cash on that market cap. So just a lot of metrics tell me that there's so much value in Zoom, which leads me to expect that, boy, this would be a really good acquisition target. If somebody acquired Zoom, they'd pick up $4.5 billion of revenue. They would get a very good balance sheet with lots of cash. They would get great profitability. Maybe this is a product category that bigger company really wants, let's say an Adobe. And boy, that can make a lot of sense for everybody involved. I'm just saying, I have no idea if that'll ever happen. I'm just putting it out there. Now, the forecast for the company, we got 19 analysts to cover Zoom. They all say it's discounted, even at the increased stock price that they're enjoying today. But no one's pulling the trigger. I think everybody recognizes that the market is pumping the brakes on Zoom and not really eager to dive in head first. Maybe today changed the picture with some investors diving in. But their earnings per share really grew this year, and they're really going to keep that earnings per share nice and high. So that cash flow, it's just going to keep flowing. It's going to keep flowing. They're going to keep buying back shares. They're just going to be a really nice, valuable small cap. And I'm going to use this data in my valuation as I look at Zoom. Looking at their earnings were real. At first glance, I thought, okay, I'm not impressed because their revenue only grew 2.1%. I would have liked to have seen 10%, 15%, but it's a lower number. Enterprise revenue did grow by 3.5%, a little better. Enterprise revenue is where Zoom's being used by big companies so they can give it to other employees. So that's good because that's probably a more profitable customer. Margins, 3.39%, which is excellent, and they expanded their margins. So that is very good. They expanded their free cash flow. It's very good. They expanded their cash flow from operations 33%. That is phenomenal. They bought back 4.8 million shares of common stock in Q2. And they got plenty of cash to do that all again. So those were the highlights of their earnings. Their guidance is that they're going to do okay going forward. And nothing really exciting to me. I like seeing top line growth on revenue. As mentioned, I'd love to see Zoom grow at 10%, but it's just not happening in the current year. When we go down through the financials, just things look really good. Their balance sheet's excellent, lots of cash. These guys are going to be around for a long time because that cash is going to keep them in the game for a long time. Their profitability is exceptional in the quarter, and their free cash flow up 33%. That's a lot of cash that the company's generating for the first 6 months of the year. So when cash is king, look at the most valuable companies on the stock market. They generate high levels of cash. If you look at Apple, it's a 3-point-some-odd trillion dollar company. It's not growing. It's not growing even a couple percentage points like Zoom. They generate lots of cash. They buy back shares, and they're able to really have a very large market cap. Well, I would like to see Zoom have a higher valuation because I think they really do deserve it. But the stock market thinks otherwise. They've certainly have thought that way for more than a year. We'll see what happens. Now, let me go to my valuation of Zoom. So I valued Zoom using the new financials that they released, and the results are really positive. Overall, I think the stock is discounted by 69%. I get to that valuation really looking at realistic numbers behind their free cash flows and their earnings per share. I take a conservative discount rate of 10%. This company is very low risk, but since it is small, I went with 10. And I still drive a 69% discount. This is using their new higher stock price that they're trading at today. So overall, it just provides a tremendous discount. And I'm glad that I bought the shares, but I'm a little perplexed that the stock market has not acknowledged that there's a lot of value behind Zoom. We'll see. Maybe over the next couple months or over the next 2 years, the stock will really begin to rally. We'll see. How desirable is the Zoom business to me? Now, the Zoom business is very desirable from the fact that it's a software company. It's really grown its user counts. It's really maintaining the amount of usage. Keep in mind, Zoom could raise their prices a little bit like Netflix, and really increase their revenue. Not sure they're going to do that, especially as we go into a recession. But at this point, the company has a lot of cash on their balance sheet. They are continuing to grow. And overall, my desirability score for Zoom is that they are partially in the gray and partially in the green. Now, they have competitors in the form of Microsoft that has their platform for video conferencing, as well as other companies. But nobody can argue that Zoom has been the favorite among users. That's why they've grown. It probably has the best user experience of all of them. And they continue to advance that user experience. Video conferencing is not going to go anywhere. It's just going to continue to be used. And if Zoom can continue to really entrench themselves in the whole usability and psychology of the corporate space, I think they're going to be okay. It'd be nice for them to start growing a little faster. We'll see if their additional communication services really take off and they can grow their business along that new product line. But overall, what am I going to do with the stock? I'm going to hold Zoom shares. If the market begins to rally, into Zoom, I may begin to buy shares, but I need to be careful because I've been hanging on to this stock for more than a year. My return on the stock is only 1%. So that's a terrible return. And I just need to recognize, when is the market going to acknowledge the value behind Zoom? Or maybe it gets acquired. In any event, I've invested over $30,000 in the stock. and I'm okay at that position. I think my money's going to be fine, but it hasn't had a very good return on investment. I'd like to see that change going forward. So that's my video on Zoom. Just a reminder, I'm just an investor sharing my experience. I'm not recommending that you buy, hold, or sell Zoom. I'm not providing any financial advice. Please make your decisions on your investments independent of this video and very carefully. Thanks for watching. Good luck investing in 2024.